Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin, and Dennis Dick would join us in a few minutes here, a little later in the show, as he gets through this action in the market this morning, because it is a wild one. We have a bit of an international incident here with the arrest of the CFO of Huawei. We're going to talk about that. We're going to talk about how just we were feeling so good a couple days ago. It's giving it all back now, though, so we're not really sure what to make of this market here. Just a lot of the stocks that were trading up a few days ago were feeling better. What they're now, they're down. Tech in particular. Look at China across the board. We are weak here this morning, so we're going to talk about just the macro landscape and drill down on some names. In particular, we have a couple of earnings to discuss. We have strong comps from L Brands. That's like the good news of the morning, the one good news of the morning, pretty much. But our guest today also, Sean Udall. He would join us at 8:35. He's from Quantum Trading Strategies. Joel, how was your day off? And tell us what the market's doing here.
My day off was excellent. Got to work out, got to swim in, just ran so many errands, you wouldn't believe it. And here we are back at just a bloodbath here. I guess the only way I could characterize this market, to me, it's broken. And I don't know what all the specific reasons are, and I don't know if it's permanently broken. I don't know if it's going to be fixed, but just the fundamentals are not looking good and the technicals are looking worse here. So let me recap the action. A wild night in the S&P 500. We traded on Thursday up to 9:30 a.m. and they jacked the spoos to 27.2075. We were up 20 handles. We peeled off there, closed at 9:30 a.m. And then the news broke about 5:45 about the arrest of the Chinese CFO. And in the first bracket off the 6 p.m. open, folks, listen to this. We opened up at 27.13 1/4, went to 27.14, and then we dropped 65 handles in less than 15 minutes. That is an unbelievable crescendo of selling. Pre-market low, 26.4975. That's a target. And then now you just got to look at your low from November 26 at 31.50, and then your low at 26 even, and then the big old number, which I sure hope we don't see today. That's the low of the move at 26.03. So the bad news is we're down big. The good news is that we are still 60 handles above the low of the move. And if you think I get bearish on my rants and we take out that 26.03 on a closing basis, then it's time to really pack up the tent and take a lot of money out of the market. Crude keeps trying to rally. OPEC says things goes right back down 230 at 50.95. For crude, we'll be keeping an eye on the double bottom at the 49.50 area. No safe haven in gold this morning. Gold down 490 at 1241.70. Silver down 20 cents at 14.44. Bitcoin in the red by $137 at 3,700. Struggling to get over 4,000. Spencer, what did you do on your day off?
I came into the office for a little bit and caught up on some work and checked out my. I did some charting yesterday. I looked at some charts, some with the day off.
And what did you find?
What
do you see?
I didn't find anything good. I was just looking at some funds and some stocks I had put on my radar a while ago and figured with the day off, might as well just catch up on what they've been doing here. Just looking at some China. I didn't buy anything, but it was just sort of catching up here on just taking a little longer term outlook on some.
Can I ask you a question, Spencer?
You can.
Can I ask you a question?
Yes.
Okay, so before you came to Benzinga,
yes.
Okay, Like, how much did you look at the markets? And like, if someone would have said to you before you got your job at Benzinga, hey, look at this chart, what would you say, or what would your thoughts be? And now, what are your important technical indicators that you use?
Yeah, I don't use a ton of technical indicators anyway, even now. So to answer your question, if someone had said to me maybe 5 or so years ago, look at it, it doesn't take a dentist to see, whether a chart is going up or going down. I was not as active an investor as I was before I came here. I was extremely passive, would be putting it lightly. I didn't do a lot of charting. I didn't really look at charts too often, really. I just looked at Macy Holdings, because I own some ETFs. I would just look at some holdings and not a ton of fundamental analysis either, really. Just not a ton of not a good answer.
What do you look at now? What's your go-to thing? I mean, we talk about a lot of, Nick talks about a lot of fancy stuff. We talk about a lot of technical stuff. What's your go-to thing? When you first go to a chart, what do you look for?
When I first go to a chart, I'm looking at I do a little bit of what you told me. First thing I do is I look at a 5-day just to get my bearings and what's happening the last couple of days. Then I go out to a 1-year daily, a 3-year weekly, and maybe even a 10-year if it goes back that far, just to kind of get my bearings on what's happening here. And I basically just look for like levels of like obvious support and resistance, honestly. Whether we're in an uptrend or whether we're in a downtrend, I'm looking at sometimes I go into like relative strength. But I find that the more indicators you use, the crazier your charts get, the harder it is to read, and the more they can contradict one another. So I try not to get weighed down by too many technical indicators. I try to keep it simple. Obvious support. Is there obvious support? Is there obvious resistance? Okay, is there, what's the volume like? Occasionally I'll look at RSI, but mostly I'm not using like charts to get my ideas, or I should rephrase that. I'm not using a chart to decide whether I'm gonna buy or sell anything. I'll use a chart to get an idea, and then I'll go into the fundamental from there. But that's generally how I do things. But we have a bit of a global crisis here this morning, Joel. So here is the timeline of events. So Saturday night was when it was announced that the U.S. and China had reached a temporary agreement on their trade war. That was Saturday night. Now, that same day, sometime on Saturday, the Canadian government arrested Meng Wanzhou, the CFO of Huawei. And so that happened Saturday, but we didn't find out about that until yesterday when the Canadian government said they had arrested her while she was transferring flights. She's now being extradited to the U.S., and this has prompted a bit of an international. And that happened the same day that we reached an agreement with China, a trade agreement. So now people are freaking out here. This is the biggest story, the biggest headline of the morning. I don't really know what to make of it.
I mean, if you look at it, over the last week, we had like the biggest rally in 5 years, or there's some statistic like that. Part of that rally was based on Jerome Powell saying, getting a little dovish, woohoo, everyone loved that. Then all of a sudden we had a truce, woohoo, everyone loved that. And now, less than a week later, we have an inverted yield curve, we're going into recession, and we have terrible relations with China. To me, just too much volatility, unstable market, unstable fundamentals, technicals. I mean, keep your eye on your October lows. For me in the SPOOs, that's 2603. That's 60 handles away. I hazard to say I don't think we see that today. But can we just we be in a trading range from 2600 to 2800? I think that would be a best case scenario. But for you, individuals trading out there, look where your stocks are trading relative to those lows that we had, the lows of the move, and then just see how they react to that. Actually, the low for the SPOO, I said November, but the low in the SPOOs was on December 29th. So keep an eye on those, and as well as the relative lows in the stocks that you are trading. So
some of the individual
SPOOs
names
at
here.
26, 60, 61 right now, down 41.
I want to look at some individual names. Let's start with Baba. If you just look at the gift of Alibaba from the past, the gift you got from like the 30th, from really November. That gift rally, we're at 169 3 days ago in Alibaba.
I know, and Dennis, when he comes on, if he comes on today, he was looking at that and he was like, it's in my long-term portfolio and I just feel like dumping it. And I'm like, now, Dennis, this is your long-term portfolio. You can't sell things on your long-term portfolio. And now it's what, $5 away from there. Looking at Alibaba trading down 479 in the pre-market. I guess you just have to take the dips and the rips in this thing. What do we had a nice move? If you want to do the bigger picture here, you had a low from 130 this thing got to, and your high, let's just call it 170, 40-point move. I don't know. Maybe I get interested in this thing at the 150 area. That would be the 50% retracement. Looks like we have a few gaps to fill, so that's what I'm looking at here as a potential support level in the Bobster.
Yeah, I'm just basically just looking across the market here, and look, it's the same pattern everywhere you look. And look at Square too, same thing. That whole November, if you can, that call it a rally, I guess, in November, and it's gone now in 2 days.
Not quite back to the low of the move. This one's trading down $1.86. The low of the move was 55.37, and you got up to 70. Call that 50-point move. So 61.5, 62 is your 50% retracement. I would say, I mean, as much as you could do, like, your bearish rants and stuff, I don't think the institutions that really want to, be long this market had an opportunity before that rally on Monday. So now, if the institutions really want to be in the markets, then they're going to be nibbling today. They're going to be nibbling over the next few days, because they weren't nibbling on Monday when we were trading up at 2,800. You got to also think that institutions don't make decisions based on one day and one SPU open. If they want to buy 2 or 3 million square, they want to try and buy it under 60. Then they're going to wait and they're going to try and buy 2 or 3 million square under 60. They're not, we have the overreactions and in the after hours, the pre-markets, because the big players could take the SPUs anywhere they want overnight, because there's no stocks to keep them in line. So, we want to try and be two-sided here with our talk. And, with the market down at these levels, this is where the institutions are going to be buying. They weren't buying on Monday.
I was just saying, I look for obvious levels of support and resistance. Is this not an obvious level of resistance at whatever, 28.15 in the SPUs and 280 in the spiders? I mean, is that not an obvious level of resistance?
Yeah, but when you're up there and you're trading up at 28, 2790, 2800, and we got a truce with China. Everyone is bullish. And on the other hand, when we're down at 2600, boom, everyone is scared. I mean, from a longer term standpoint, from a monthly standpoint, we have been trading between 2600 and 2800 for the majority of the year. We did have the run up to 2947. But before the run-up, we were stuck at 2,800, and now after the run-up, we're stuck at 2,800. So it's a trading range right now, and you can get, upset as you want about things, but until the bottom of the trading range is taken out, you still have to, maintain even keel. So let's we had some changes with the earnings and whatnot because being closed yesterday. Do you want to?
Yes.
Did we have any after hours Tuesday, or did everyone move things to this morning? What do we got?
We had some after hours yesterday, but before we do that, I just wanted to have one more point here. And what about the people, and I may be in the minority, I could be, but you have to always ask about the money that is still on the sidelines. And I've been underinvested for far too long now. I wait, and I miss it. But people like me, and maybe I'm in the minority here, but I'm underinvested. You got to ask about the money that's on the sidelines, and when's that going to come in? When's it going to come in?
What would that do? Come in on Monday. It might come in today, but where money on the sidelines, Spencer. I mean, have you looked at what some of these big banks and brokerages are are offering on deposits of 50 or 100,000. Do you see what kind of rates they're offering out there?
No, no. Enlighten me.
They're 3.5, 4%.
Okay.
Sold.
Okay.
I mean, that's
I like that.
In this kind of market, I mean, I've never looked for gain. I tried to average between 5, 6, 7. By not owning the high stocks, man. Whew, bank calls me, or one of my money managers calls me up and says, "Hey, you can park 50 here at 4% for 6 months." I'm like, "Whew, that ain't a bad idea."
Yeah.
You try and buy some of your higher dividend stocks, but they drop 3-4 points in a day, and that can wipe out a couple of years worth of dividends.
All right, let's go back to Tuesday here. We had a couple of earnings from after close on Tuesday. Most notably, HP Enterprises, HPE. They reported Tuesday after the bell a Q1 EPS of 45 cents, which is a 2-cent beat, and sales of 7.9 for $7.8 billion. Their Q1 EPS guidance was in line. Their fiscal year EPS guidance was also in line. Everything pretty much in line for HPE.
HPE, investors would say, "Oh, this is a bad day to report," with the way the markets are acting here. But we are down 42 cents here at 14.63. Let me see if anybody got excited here in the pre-market or the after-hours session. Boom. We've had not a lot of trading. We've had a couple lows at the $14.50 area. Oh man, I see the lows of the move down here. I guess that's what you got to be thinking about. Your October low, 14.48, only trading 15 cents above that. Very important for that to hold, or I could see more downside. If you manage to get a rally here in HPE, a quick rally might get up to unchanged at 15.05. That was your closing price, and major resistance at the double top from Monday and Tuesday, and Monday's close is right there at 15.50.
A couple from after the close yesterday, most notably Five Below and CLDR. Five Below beat on their EPS and beat on their sales, 22 cents versus 19 cents, and 312 versus $304 million. We'll start there. Five Below.
I'm sorry, Five Below?
Yes.
I'm sorry. I'm trying to answer some questions here in the chat. Five Below, I know that's been a favorite of Larry Glickman's for a long time, and we are trading up $1.41. You can't argue with that being green here on a red day. Pre-market high is 108.67. We have backed off from that area. I just keep an eye, see if we can get up to 110.08. That was your high from Friday. I think that'd be a good target, $4 away from there. So I don't know, nice round number like 110. Coming back on the downside, I don't know if you're going to get a shot at Tuesday's low here, but Tuesday's low comes in and actually got 3 lows in the 103 handle. So if you're inclined to short this and you're looking for an area of support, 3 out of your last 4 lows have been, let's just call it 103.40.
And the other one from yesterday was CLDR. Q3 EPS of a 3-cent loss versus an 11-cent loss estimate, and a revenue of 118 versus 113 $1 million. So a beat on the EPS and a beat on the sales for CLDR. Again,
and trading up 36 cents, up 3%. Not bad in this tape at 11.95. I want to see what takes place at 12 and a quarter. You take out 12 and a quarter, you believe her out of me, and then you get your secondary resistance much closer to 13. 12.75 is your 2-day high.
Let's move up to a couple of the earnings from this morning. We have Michael's Q3 EPS 50 cents versus a 44-cent estimate. Sales 1.27 versus $1.25 billion. So a beat on both EPS numbers. Both Q3 numbers. On Q4, their EPS guidance was in line, a little higher than estimates. Comps guidance for the quarter down 0.5% to up 0.5%. So pretty much flat is what they're seeing. Fiscal year EPS guidance coming in higher. Fiscal year sales guidance coming in higher as well.
Well, they must be selling a lot of scrapbooking material and some very expensive scissors here to bang out that quarter. You got to pop to 1780, and now you're just hanging here at 1738. This area over 1750 is what I think I would look for a key to more upside. Two highs, actually three highs. Let's call it at 1770. So it takes that out. You can test the sellers up at 18. Coming back on the downside, the close is way down at 1642. But I think 1750, that's a level of control here for Michael Stores.
Today's probably, Dennis would say, like you said, today's probably a bad day to report earnings. Today's an even worse day to cut your guidance, which is what Children's Place did this morning. PLCE in their earnings report, the Q3 EPS. Yeah, the Q3 EPS was a beat. The sales beat, but they cut their fiscal year EPS guidance, and that is going to do it.
Let's see here. This was a favorite short of Rachel Shashas.
Yes, it was.
Right?
Yes, it was.
Yep. So, hey, Rachel, if you're listening, man, I hope you're bringing this in or still have your short on. Straight down here, pre-market low is, let's see, what do we got for a pre-market low? 110 even, and you're just sitting at a 111.56, right? So not good. You're $1.50. You take that out. Maybe you can just think about $100 is a nice even number, but I'll give you an intermediate level in between there. 106.25 was your November low of last year. So keep an eye on that. If in fact you're already taking out the low of the move. The low of the move was at 120.85. So that would be your resistance. But just don't like that it's just sitting $1 above the pre-market low and not really bouncing.
Biggest report of the morning, probably Kroger. They were out at 8 o'clock. Kroger Q3 EPS 48 cents versus 43 cents. Sales 27.6 billion is in line with estimates, or a slight miss. So a beat on the EPS, a slight miss on the sales. They cut their fiscal year GAAP EPS by 8 cents from $3.88 to $3.80 on the low end of that range. So a slight GAAP EPS cut for the fiscal year and a mixed Q3 report.
Tough chart here. You did get a spike in the pre-market down to 26.86, and you recovered a buck off that. So I think back at fill here, maybe at $27 area, that's where it cleared out before it beat its last report. 27.18 and 26.94. Those are your couple lows that you had at the end of October. So if you're patient, wanting to go long or trying to cover a short, don't see much between here and 27 pre-market low, and it's only down 64 cents. So I like that. I like that support here in Kroger's.
Joel, can't forget, what about the follow through in the pot stocks from Tuesday? Let's pull APHA up quickly, and then we'll go to the other ones here.
Oh man, I didn't want to look here. How is it?
It's bad.
It's bad. Yeah, Dennis told me that was trading down in Canada yesterday as well. I don't know what to tell you. I mean, I'm not buying it. I'm not buying it at 397, 297, 197, or 97, unless I was short. Dennis alluded to the company and, their reaction, pound to the table. This isn't true. No. And that's not what you got out. So you got a lot of people trapped. I know he was going to try and play it for a bounce. So I'm not. So if we can get him on a little bit later.
There's more news. There's more news this morning from a friend.
What do you got?
Afria appointed a special committee of independent directors to review the purchases that were questioned in that short report from a couple days ago. So they're reviewing their own transactions now. So that's not a good sign.
Go for was it Dubai or whatever? He says Constellation's brand sold its CGC. Did you see that?
What?
I did not. I don't want to talk about news that's not true.
I think that's a joke. I think that's a joke.
Okay.
No,
that would
no.
It's traded down a couple bucks here. That's taken out the low of the move too. 30.26. You need to get back above that for control. I don't know. These things are just the sector is turned, and I don't see where this thing is going. The move started at 24.46. This was in August of this year. Another low at 24.21. So if you want to be on this one, maybe look for it under $25.
The one area of good news we do have this morning is Lululemon.
What's up with Lulu?
I'm sorry, not Lulu. L Brands. L Brands reported comps. November comps were up 9% on a year-over-year basis. L Brands. That's their best comp showing, I think, all year.
You know what? This is a stock I put in my portfolio. Lisa's recommendation, and it's just driving me crazy. I want to sell it at 29, and I want to buy more at 37. So I just kind of want to just get out of it and move on. We're trading up here in the pre-market, only 4 cents. So not a big reaction to this. 33.90 is your pre-market high. Let's see what happens at $35. If it can break out, get over 35 and hold 35, I think we're good to go here. But man, it just looks like this thing is turning south again.
And somebody asking in the chat if we can get Alan on the show. As soon as he comes up for air, I think he'll come on, but he is, I think, neck deep in all this news from the past couple of days. But if we can get him on, he'll be on, and then you'll know. If you have any questions from our chats, any takers you want us to discuss, throw them out, and we will bring them up. But Joel, a quick update here on the S&Ps. Where are we at just about 8?
We're kind of quiet.
Kind of quiet now?
We're kind of quiet here. We're at 2666.0, 2666 is where we're currently trading. We have settled down here since the Arabs have come in, and actually, if you throw the 15-minute chart there, we're on the rebound. We had that 49.75 low. That was like a panic low to 6 p.m. opened, and at 5:30 this morning, you went down to 52.25. So now a majority of your 15-minute candles have been green here. A level I'll be keeping an eye on the upside. If we get a nice rip, will be at 26.82. That's a mid-range on this crazy session so far today.
So 2 days ago, the narrative was inverted yield curve. So let's look at the financials in the wake of that. I don't think people are going to talk about that today, but they were talking about it a lot on Tuesday and a little bit yesterday too. So let's talk about some of these financials. Let's start like Bank of America here and just give us some levels here on these banks.
Man, oh man, I'll tell you, Bank of America, when that opened up at the $29 area on Monday, I tried, I'm like, okay, this is a little too much too fast. I tried to shorted it, but way too soon. I think I covered early on Tuesday, and that thing went down another $1.50. I mean, market doesn't like whatever's the yield curve, interest rates. I mean, if we have a recession now, then you're going to get more QE, and the banks really didn't rally a whole lot when you had the higher interest rates. So I think the worm is really turned here for Bank America. There's a buyer lurking here at the 26.40 area. 26.30 is your pre-market low, and it looks like you got some kind of institution or some kind of big trader wanting to bring in his short at that area. That matches your October 30th low at 26.32. So like it's support to cover short, maybe nibble it along. Low of the move, though, is down at 25.88.
What about some of these other banks here? Wells Fargo, JP Morgan, same story?
I have not looked at those charts as closely, but I'll take a look at the JP Morgan trading down another $1.13. Ugly candle here. I mean, someone's dipping their toe here at 105.60. And do I have a low here to lean on? Boom, not really. 104.86 was your 1030 low. And then the low of the move was 102.73. But the way I would approach these stocks, is I would look at like these October lows, and I don't think you're going to get them today. I think, I think you have some kind of rebound here, off the open. We'd have to go down another 60 handles in the SPOOs. So just keep an eye on those October lows. And for JP Morgan, that's another $4 away. And then what was the other one? Wells Fargo?
Yep.
Man, some ugly candles on Friday. This is trading down 78 cents at 50.98. You may get a shot here when this one bottomed a little bit ahead of the other banks. This bottom on the 24th at 50.02. So you're not, a buck away from that. You also had some intermediate lows at the 50.50 area. So maybe give a look at those October and early November lows here in some of the bank stocks.
All right,
and just remember the jobs number tomorrow. Is the jobs number now going to be meaningless?
Oh man, forgot all about that. Yeah, I mean, I guess.
Right?
Do fundamentals matter if the market is unhealthy as you say it is?
Like what if it's a hot number? What if we get a really super hot number? Okay. Now and then we're going to be worried about inflation instead of a recession. I don't know. We'll see. I mean, it'll be very important to see how this market reacts to the jobs number.
Yeah, 200,000 is the consensus estimate for tomorrow. Unemployment 3.7%. So let's see what happens. And then I guess that'll inform the Fed meeting in 2 weeks. But we'll find out tomorrow. Real quick, before we get to Sean, let's cover a couple quick earnings stocks that are being requested in the chat. I'll start with Momo. They reported late Wednesday night a EPS in line of 53 cents, and its sales beat 535 versus 533 million dollars. So a slight beat on the sales and in-line EPS for Mo. Not a good day to beat China stocks, though.
No, there you go. Trading down 411, 27.58, just off the lows of the pre-market session. 26.80 is your pre-market low. I have not seen anything in this one until call it 26.21. Might get a little bit of interest there. That was your February low. After that, you drop off to the $25 area. Is there any volume trading in this thing today? Let's see. They're throwing around some pretty good volume here. So keep an eye on that pre-market low and see if we can get continuation to that. If not, you may be having to buy it on the upswing.
Yeah, I'm seeing about 340,000 shares have traded in Mo. One more, and then we'll take a break to grab our guest, H&R Block. They had earnings this morning, Q2 EPS. 83-cent loss versus 93-cent loss estimate. Sales $148 versus $139 million. So a beat on both, but not really doing, just kind of hanging out here.
Yeah, the H&R Block bought Oldie Discount, who I worked for a long time ago. I think we have some Oldie traders in the chat too. Big ol' area here. What can it do at 28.15? Three highs, your last three sessions, 28, 13, 14, and 15. Still 50 cents away from that. It clears that resistance. Maybe you get a shot at 29, but that resistance is sticking out to you pretty obviously. On a pullback, if this thing goes red, 27.52 was the close. You could very easily do that. Look for 27 to be pretty good support. Your last three lows flank the $27 area.
All right, it's been about a month since we've last talked to our next guest, so let's do that here. Sean Udall is the CIO of Quantum Trading Strategies. We'll be right back in a moment with Sean. And as promised, we are now live with Sean Udall, CIO of Quantum Trading Strategies. Sean, how's it going today?
Good morning,
Benzinga.
Okay.
Well, you guys always know. I mean, I like these kind of mornings in general because, in fact, my call a few months ago was that we were finally out of the low volatility vortex, and volatility has increased notably, which, for guys like me, at least, if you know what you're doing, this is the environment you can make a lot more money in because you can increase your trading frequency and you have a lot more trading opportunities. So in a day like this,
Sean, let me hop in now. It's good for me and you and people that like volatility, but overall, do you think this kind of volatility is good for the market?
I actually do. Now, it can get to a point where it gets too crazy and too nutty and too scary, and that's not good, right? Especially when it becomes so irrationally scary. But I think the thing that I can say that the most salient thing I can say today is that this sell-off has been the most beautiful sell-off if you do any kind of valuation discipline type work, because what's really happened since September, basically, since the risk-off trade kind of really accelerated and then really accelerated in October. But this is like one of the few times that I can clearly remember that kind of the stocks that most deserve to go down have gone down the most. So, I'm talking NVIDIA, which was egregiously expensive at 250. I mean, it was laughable expensive at 300, and they cut it in half. And we could go, I'm not going to name 40 other names, but cloud bubble, fang bubble, again, Facebook's almost been cut in half. Again, that's a very necessary correction where most of the stuff I'm parked in alongside has either held flat or a lot of it's actually gone up during the last 2 months.
So like what?
So the market, pardon?
Like what?
Well, Twitter's acted fine during this whole sell-off. There's quite a bit of names that have held up, very, very well. And really all you have to do is kind of go back and look at the earnings reports and the companies that have had the best reports that weren't super expensive. Like, it didn't help Netflix. Netflix kept going down. But certain names that like a Finisar IIVI combination has held up reasonably well during this whole sell-off. Again, there's a lot of names, a lot of stuff that's done pretty well. Here's the only mystery, and Joel will probably chime in, is that oil has been really, really weak. And I'm not so sure that you could say like oil stocks and the price of oil was crazily overvalued at $70 or $75. So that's probably the one victim maybe in this whole space that I think has kind of been an undeserved victim, would be oil stocks and the price of oil. But the market's always going to take down everything to a certain degree. And by the way, I'm not saying like Twitter's up 40% while NVIDIA is down 50%. It's more like Twitter's sort of flat, NVIDIA's down 50%. That's a hell of a lot of relative outperformance.
So when I texted you last night, I asked you to come on the show, and I said, we got a bloodbath here, and you were kind of optimistic. You were sharpening your buy pencil here and stuff. Is it from your technical indicators or from the stocks that you're looking at? What makes you positive on the possible rally here in this session?
Well, there's three things, and they're really quick. First of all, a lot of this I think has to do with the CFO of Huawei being arrested. Yep. And again, she was actually arrested on December 1st, the day of the meeting, the day before the dinner. And there's no way. I mean, does everybody not think that China didn't know she was arrested on December 1st? I mean, come on. So that, I mean, if you believe that China just found out about it yesterday, then I guess you believe, Zero Hedge, and Zero Hedge is reporting. And, Zero Hedge has sort of been like, they've said the U.S. was going to become a third world country like 248 times. So, and I'm not picking on them specifically, but there's certain sort of outlets that are just sort of perma bears. So, you know, the perma bears always find any bearish story and say the world's collapsing when in fact the market spends a lot more time going up than going down. So the bottom line is that's kind of the typical narrative I think we're getting into, is that, again, this was probably known by China the day they were negotiating the deal talks, and the deal talks were relatively positive. So I don't think you should make too much of the CFO being arrested. Second, yeah, sentiment. We basically almost hit kind of a perfect. The reason a lot of selling kind of occurred when it did is sentiment got too hot. I mean, you know, you had a stock like Okta, which I really like. It literally didn't stay down long enough for me to buy it. I mean, that stock went from 42 to 63 in what, like 4 trading days or something. You know, a Workday off of a very good report. And by the way, like Workday had held up. I mean, that's an interesting. Workday had not corrected nearly as much as a lot of other stuff. You know, Workday's at all-time highs and had a huge move post-report. So the bottom line is we kind of were getting pretty hot. And in fact, I posted a NASI chart, this is one of the McClellan oscillators, the summation index on the NASDAQ. And it kind of hit a natural resistance spot literally the last trading day. So now that doesn't mean, you know, we should have dropped 700 points in the Dow, but you know, markets are kind of wild right now. Moves are exaggerated. So yeah, I mean, I put it this way, I'll say something kind of crazy. I mean, we could close flat to green today. I mean, that's how wild these markets are right now. I'm not saying we're going to, but I wouldn't be a bit surprised if we closed flat to green today.
Okay, and so what is on your shopping list? I know you've been talking about Twitter here. It looks like it's putting in a nice base here. Can't really break out over 33, 34. I don't know. I keep trying to get this thing at like 20, 28, 50. Am I going to get a shot there before it goes higher?
Maybe, but the Twitter is actually one thing not on my shopping list, because the day it hit 30, what was that, 2 days ago or 3 days ago, trading days ago, I actually put a nice trade on, about some common and some calls, and I actually already sold half the calls on it, I think 2 days ago or whatever. So, and then, you know, sold those calls plus 100%. So Twitter's not on the shopping list because I was a buyer at 30. I don't, you know, there was a buy on Twitter today. I'm not so sure Twitter's, you know, Twitter could be green today.
Well, that's only down 27 cents. Let's talk about the trade that we talked about a couple week or so ago, and I was thinking about, you know, Apple has been displaced by Microsoft as the top component, and I was thinking, what do you think about a long Apple, short Microsoft spread? And and you had a new twist on it here with your value stock call. Tell us what stock you told me is on your radar.
Yeah, so the, you know, I first of all, I wouldn't hate that spread because Microsoft is an active short of mine. But I'm not, you know, I don't like Apple a ton here. I don't hate it, but I still think Apple could maybe drop, I don't know, I wouldn't be surprised if Apple dropped another 10-15%. And that's going to be probably a lot less than Microsoft's going to drop. But I would favor IBM, because I think IBM has taken far more pain. It's better where it is in the cycle right now, is kind of on a bottoming and kind of I think it's on an earnings upswing. Weren't we on the last time that they had just bought Red Hat? And you know, and while I said I didn't love the deal, and I think there were a lot of better deals they could do, that's exactly what they need to do. Buying Red Hat's a lot better than them not buying anything. So yeah, I think IBM long, Microsoft short would work really well. I think of Microsoft, or I'm sorry, IBM long, Microsoft short, or yeah, something like Adobe. You know, Adobe, Intuit, Autodesk, those are actually more overvalued. But I just really like Microsoft short, and the reason I do is because, first of all, there's nobody in the planet, like, there's lots of people still think, oh well, I'm glad I'm in Microsoft, or oh well, hey, okay, yeah, NVIDIA is kind of scary, but I'm going to buy Microsoft. Well, that's exactly what you don't want to do. What you don't want to do in a market like this is buy something that hasn't dropped a lot, because pretty much if something hasn't gone down and taken the pain, the algos are going to go after it. So in my mind, the worst thing you can do is kind of keep trying to bounce to the latest strong stock, because what is strong is going to get taken down. But Microsoft, I actually think their earnings cycle is about peaked out. So there's another fundamental catalyst I always call peak earnings. And when a stock hits peak earnings, one of my best shorts of the year, in fact, one of my best shorts ever, was shorting AOI earlier this year. And I basically made a peak earnings call on it. And, stock went from 90 to 20. I wasn't short 70 points of it, unfortunately. I was short a pretty good chunk of it, though. And if Microsoft is relatively close to peak earnings, then, I mean,
how do you tell? How do you tell? When it's just the rate that they're increasing their earnings? I mean,
yeah, well,
how do you tell?
That's the biggest thing I always call the second derivative. So the rate improvement has already started slowing down. And in fact, this is what clued me in. I was negative on Facebook a good 2-3 quarters before it finally cracked. And everybody kept talking about, the quarter's good, the quarter's good. Well, if you're a guy like me, who is long Facebook at 22 all the way to, 70 to 100 or so, guess when I owned it? I owned it when there was no decline in the rate of growth. I mean, it was 40%, 40%, 40%, 40%, or even higher. They were actually accelerating growth the whole time I owned Facebook. And by the time Facebook hit 180 to 200, they weren't accelerating growth anymore. The growth was still good relative to the size of the company, but it was declining. The rate of growth was falling off. And there's only so much time that can kind of hold up for a stock finally capitulates and goes down. Now, so I mean, Google did the same thing years ago. Google had to kind of rebrand itself as a kind of a value growth stock, because they quit being, again, same thing. The years I owned Google, it was always a 28 to a 40% grower, and I actually sold it at a pretty good point, where if I had held it, I would have had to wait, I think, something like 2.5 years before the stock started working again. But Google now had this huge increase as it was sort of a mid to high teens grower, but it's because they had to change their deal. They had to say, okay, we're not going to spend as much money. They became an EPS growth story. Ruth Borat, the new CFO, came in. They got a bunch of positive catalysts. So, you almost have to wait for that. Like that'll be the next great opportunity on Facebook, by the way. I'm not buying Facebook yet, but I don't think it's a good short anymore. But when Facebook
would make you super bearish?
In this environment, I'd have to kind of see. I'd probably have to see that if the right stocks quit dropping, and all of a sudden they started attacking stuff that was just super, super cheap. Basically, if something started happening like a 2015 type setup, a currency war, if we started if this trade war more enveloped into a currency war, and you start seeing China started doing very aggressive things with like yuan devaluations and things like that, I'd cut 1/3 to 50% of my long exposure right away. So there are definitely factors. If the Fed let's say we got another good quarter of earnings, or another good quarter. By the way, earnings were great, but let's say we got another good quarter of GDP not growth, and all of a sudden the Fed started talking super, super aggressively again. Same thing. I'd sell 1/3 to half of everything, and probably I could do it in 15 minutes. So there are things, but in fact, what I see now. But here's the thing. I think last time you talked, I was really bearish. So I was actually very bearish at NASDAQ 7,900, 8,100. And what was I talking about? Talking about all these big shorts. I was about the FANG bubble and the cloud bubble, and IGV shorts and Adobe shorts and New Relic shorts and stuff like that. By the way, I've covered about 75% of my shorts. So or that. A market that gets way too over enthused in an environment where we have more tough sledding. But yeah, no, I mean, I was a lot more bearish, 15% higher on the stocks, 20% higher on the Russell 2000. So I don't know. In other words, I tend not to get more bearish after stocks have the high value stocks have declined 50%. That doesn't tend to get me more bearish. That gets me more bullish.
All right. So Sean, let's talk about maybe outside of tech. Is there anything else that's like on your radar right now, maybe outside that sector?
I'm looking at oil, and I'm looking at a lot of oil names still don't mesh. So in other words, oil's declined, but it's still, 50, 55-ish or something like that. And maybe it goes to 45 and then bounces around. But a lot of stocks are kind of trading like oil's like 26 and going to 15. So oil is a possible. The problem is there could be a lot of tax loss selling. Honestly, I don't know if I'm gonna look at a whole lot until, again, either see kind of technical turn that I always about, or if we get closer to year end. Because I think here's the one thing that could continue the sell off that I'm kind of prepared for is if we just get a bunch of tax loss selling now. Now we should have had a lot already. But in other words, sometimes when you get a decline into a December decline, you don't really bounce until like the last week of the month. So, I kind of have to see how to me, the next 3-4 trading days are actually pretty critical. And if we don't get a bounce, and especially a pretty significant bounce, let's say today, tomorrow, or Monday, then, I'm not that I'd sell a lot of stuff because I'm positioned pretty well, but I might just not buy much of anything to like the last 3 or 4 trading days of December. So that's the other thing you kind of got to watch right now is that everybody always thinks you have a good year end flourish in December, kind of no matter what. That's not necessarily true. If December's struggling, a lot of times you just kind of get continual tax loss selling until the month ends.
Okay, so just going to the end of the year here, you're just repeat what you just said. You're bullish heading into the end of the year?
No, I have to kind of wait and see how things go. And what the trade would be. Sometimes the best trade is not to trade, is just sit back and wait. And I guess to be perfectly clear, I think the next 3-4 trading days are kind of a big deal. Like in other words, we kind of need a bounce. If we don't get a bounce, we could just kind of keep. I don't think we're going to string a bunch of 750 down Dow days together, but you just might not have much strength. And then you basically save capital up and you kind of buy late in the year. And in other words, you basically play for a January bounce. The more negative this is, the more positive it is for January typically. But yeah, there's some, the oil patch is sort of interesting to me.
But why wouldn't?
But I'm just kind of watching to see how things trade.
But why wouldn't a weak December mean a weak January?
Well, it's a lot of it's just statistical evidence, basically. So typically the worse December is, the worse you finish to the year, the better the January bounce is. And there's a thing called the January effect.
Right.
And it's especially good for stocks I like, because I tend to like value stocks, beaten up tech, beaten up value stocks. So, the January effect is basically all the biggest losers of the prior year, end up having the biggest bounce in the first, 4, 6, 7 weeks of the next year. The way I particularly do it, tends to work a lot better because I find stocks that are still doing really well, have reported well, and so they've been sort of unfairly victimized. So a stock that, for example, had one of the best earnings reports of the quarter, or 5 stocks that had the best earnings reports of the quarter and still declined a lot in November and December, there's a very high success rate with those kind of names into the next year. And then if they tend to report earnings, strong earnings in January, February, you get an extra kicker out of them too.
All right, one more, and I'll let you run here. But anything being asked from the chat now, where are you long besides Twitter, and are you long Cloudera, are you long Finisar, IBM?
Yeah, like I don't want to give all my picks away, but let's just talk about Cloudera. Cloudera just reported. I like the report. Before I came on the call, I think they were still green in the pre-market, which again, pre-market doesn't mean a whole lot to me. I like to see kind of when the regular trading comes in, how it reacts. But Cloudera, this was a stock on that merger announced with Hortonworks. Was basically 19 to 21. There's nothing about that merger that doesn't make Cloudera and Hortonworks better. There literally isn't anything. Now, somebody said, well, the cultures of the two companies maybe aren't great, but that can be fixed, because when two companies merge, what do? They end up getting rid of a lot of people and saving a lot of money. So any cultural issues are rectified with people getting fired. I mean, that's just the harsh reality. But yeah, something like a Cloudera, which I think is worth, maybe as much as 40. My current price target is like $28, $29. So, something like a Cloudera sitting here at 12, which has been heavily victimized from this huge risk off trade that really started not recently, but started, September, October, is very attractive. And again, hey, I'm not going to get blown out of Cloudera just because the market drops another 10%. I don't really care. In fact, like Cloudera could be a name. From here, you could have pretty nasty market weakness, and Cloudera might hold or go up. But that a lot of times you see a stock which had a good earnings report. I mean, that's why Twitter's been acting well. Ever since they reported, that stock's been a net winner. And Twitter actually took most of the pain almost a quarter ago on the previous report. But yeah, no, Cloudera is very, very interesting. I think this is an interesting deal, because in a different world, I'm not sure this deal would be passed, because it is basically a monopoly. They're going to have a monopoly in Hadoop. And I think it's okay that they're emerging, and it's okay if they have a Hadoop monopoly, because the two companies are relatively small, and companies are just so large now. Years ago, when a $5 billion combined entity might get on the radar of the DOJ. Nowadays, it's like, look, you have two relatively small companies under 5 billion market caps. It probably doesn't even get on the radar for anti-monopolistic deal. But these guys are going to have a monopoly in Hadoop. That's going to be very powerful. So, for example, if somebody was a Red Hat bull for years and years and years, this sort of combo is like a Red Hat on mega steroids. So that's a very attractive name. Finisar is already bought. That's another thing. Something. Call me lucky or super smart. But one thing I haven't done, I haven't sold a lot of my Finisar. Now it's going to be down, a little bit today. But Finisar is basically kind of holding around their M&A price. So there's a very specific reason I held Finisar. I kind of held it as for crash/downturn protection. It was almost like a hedge. I could have sold it. I could have redeployed it in something else, but I'm like, well, I'd rather just keep it, because I think it's going to hold that something near that M&A price. And if something else gets really crazy that I like, I could always sell Finisar down 5% and buy something else down 40%, right? As it goes, I think I'll just probably end up keeping Finisar and let it get merged into IIBI. That would be one. I'll close on. IIBI, again, it's a lot like Cloudera. I think this merger makes IIBI worth way more. My initial modeling of the post-merger deal is like, this pretty much gives IIBI an instant like 20 to 25 points of share value post-close of the merger. And yet, what have we seen IIBI do? They did have one of the best reports of the quarter as well. Stock's gone from 48 to 34. And that's, again, I'm not worried a bit about this combined entity. I think the IIBI Finisar merger is going to be one of the most powerful companies in the optical space.
All right, Sean Udall, Quantum Trading Strategy is fun. Sean, thanks so much for your time as always, and
take care.
Have a good weekend. All right.
Hey, take care.
All right, before we wrap up today's show, I want to just look at some ratings, and we have on the Benzinga Pro calendar here. So let me pull that up, and just like that, not a lot in the way of super big upgrades today. Hold that thought. This is Dennis.
Yeah, can you hear me?
Dennis, are you with us?
Can you hear me?
Dennis,
yeah, what's up? I thought we just concluded.
No, I that was my bad, Sean.
Hey, Sean, how you doing? I just wanted to just pop in. I'm busy trading. It's hard to do a radio show when you got this kind of volatility, so I usually take off. But I wanted to come in for a few minutes, Sean, just and do some talking here as well. So I'm gonna let you go, Sean. great. I was listening to you there for 20 minutes. Awesome interview as always. We'll pick you up again soon.
Hey, real quick, what are you looking at right now? And then,
I do herbs, so I'm doing most of the arbitrage stuff. So, you just look at opportunities where stuff's trading too low, maybe relative to where you think it should be. But, overall, like if you're just taking a back seat and putting on your investor hat for a second here, I mean, some investors got burned here in the last couple of days. You had a wicked rally for 3, 4, 5, 6 days in a row there. The upside capitulation was Monday morning, which
that's right.
we said if you were a swing trader, book your profits now. I said, and I just said this wrong, because I said if I'm a long-term investor, I'm probably sticking with it. Maybe, as a long-term investor, you should always stick with it. I didn't sell anything out of my long-term portfolio. I wish like hell I did. We're 5% last 2 days, but in a whipsaw market. Now you back down here, words of support again, say as was okay. My only concern is that this kind of came out of the blue the last couple of days, where the markets, where everything was looking rosy. I thought we'd get a pullback maybe, but I didn't see no 700-point sell-off coming yesterday, and I don't think anybody saw this, bang, another 400 or 500 points down here today. I didn't think, one of the best rallies we saw in the last 5 years a week ago could be given back in 2 days. So I think that, I expected some profit taking and maybe a little pullback on Monday and Tuesday. I did not expect a collapse.
Yeah. I hear you.
All right. And
Sean,
Dennis, if that was your last word, Sean, thanks a lot. Any final thoughts though, Dennis?
I mean, I know Joel's coming here and Sean's still there too. So lots of people on the call here right now.
It's okay.
I just approaching it here today, it's difficult. I'm still keeping my investor hat on. I'm not dumping everything out of my long-term portfolio, but I'm pretty ticked off that I didn't, dump some stuff there on Monday morning. I didn't have any trades, and we said, what we said specifically was, and I had specific questions. If you have swing trades on, now is the time to book the profits. If you have day trade longs on, now is the time to book profits. And then somebody asked me as an investor, and I said, as an investor, I'm sticking with it, because I thought, that maybe we get a pullback and maybe eventually still get back up to all-time highs. I don't know if that's still on the table here. As an investor, this last 2 days was burned so much. You burned a lot of people. Now I think you got to put the sell the rip hat on. So, here's a hell of a dip. And I was saying, maybe I would be a dip buyer. That's off the table for me. I mean, yeah, maybe you can come in and maybe as a long-term investor nibble in your portfolio. But if you think we're going to bounce right back to 280 now after this changed everything. I just didn't see this coming. So you've caught a lot of people who maybe thought, okay, yeah, we're back. We've had, a lot of people come on the show, people come on NBC with their bull cap on saying, yeah, we could get, new highs by the end of the year. And I was starting to believe it too with the rally that we had last week. I think it's completely off the table. I think all those people are wasted, meaning that anybody who was playing it long and didn't get out on Monday morning just saw all their gains evaporate in 2 trading sessions. You've pissed off a lot of investors. And that's going to be the problem coming back up now. As those people come back up, they'll be like, okay, burn me once, fool me once, market, shame on you. Fool me twice, shame on me. So I think this market is not going to be as forgiving this time as it was on the last sell-off. So that's my concern here as a longer-term investor.
All right. And on that note, Joel's here. Joel's been in and out. I'm not sure.
I'm here.
Okay.
I'm here.
But I hope
You got me?
Yeah, we got you, Joel.
Okay.
Like, what are your thoughts? You're a long-term investor.
Yeah, I am.
What are your thoughts? You see this nice, awesome rally, really for the last 7 days of before, up to Monday morning. And then you see a little, give back Monday morning, and then the Tuesday collapse out of nowhere. Like what, if you're, and then now another collapse, taking us right back down to where we were after that awesome rally of last week. Well, what are your thoughts as an investor? I mean, that's just...
Okay. I'll tell you what I think. First of all, you're more active than I am. You
sure.
take, so and I'm more passive. And for me, it's like not putting more money, not to work. That is my, bearish, my bearish position.
So you're not buying this dip today?
No.
Neither am I.
And if we take out 2,600, that low with conviction, then I'm going to peel back and even be at a higher cash level. That's what I'm doing. I'm not,
And we're both speaking, just to clarify, we're both speaking with our investor hats on here now, not our trader hats. If I was short this market, I'd be covering my shorts because you're coming back into support. But if I'm a long-term investor, I just don't know if you're coming in here now. So I'm agreeing with you, Joe. I'm not. I've got cash on the sidelines that I want to put to work. And I was even saying on a pullback, I said this Monday, if we get a pretty good pullback, I might put some of that cash to work. The pullback was too big. It was just too big. I did not think you'd go all the way back down to the lows. And that's why the investors are going to be like, whoa, what's going on?
Yep, broken market for now. We've got a few minutes over. I just wanted to come back on. Folks, tomorrow, a very special show. I'll be down in Nashville, Tennessee with Jerry Newsom of Real Life Trading. So I'm really looking forward to that. We'll get his take on the market. And Spencer, you got anything else?
Nope, nothing else on my end. So if you missed any part of today's show, catch our podcast, iTunes, SoundCloud, Stitcher, TuneIn, Google Play, or just rewatch the show on YouTube. Thanks to our guest, Sean Udall. Thanks to all of you in our chat. Please remember, all the information from our show is for informational purposes only and not meant to be investing advice. We'll see you all tomorrow. In the meantime, have a good day.